Since the last Fed statement, the stock market has gained about 6% in 6 weeks, but that hasn't come at the cost to the bond market. That's rallied as well. So what is it that the bond market is really trying to tell us? Let's head back to Brian Luke with more on this one. Brian.
Yeah, Carol, funny thing happened today. The stock sold off and bonds rallied. Why is that funny? Because they've been both rallying hard ever since the last Fed meeting. That was back in August. Let me show you exactly what I'm talking about because it's been a tremendous rally here. When you look at the S&P 500, it's adding about a third of its overall 20% returns year to date. It's about 5.9%. Now, the long bond, the 30-year bond, it's been doing a great job by keeping up with that. According to Merrill Lynch data, it's up 5.3%. So you see both bullish on both bonds and stocks right now. It's a very interesting development.
It's really interesting. All right, so Brian, the long bond has rallied nearly as much as stocks. So what is the bond market so worried about? I know a lot of folks on our program have said watch the bond market, not the equity market right now.
Yeah, they're clearly telling us two different things right now. And Dominic Konstam, he's a Credit Suisse First Boston now. He's had out some very interesting things. That's a bullish story for bonds. When you talk about some of the things he's pointed out is, one, he's looking for a second round of quantitative easing. He sees those small lending programs rolling off, and they're still buying programs. Remember, they didn't end the mortgage purchase program. They're extending it, so they're going to still grow that balance sheet. He's projecting about $600 billion to the already $2 trillion balance sheet. That's not going to be good. He says that's going to lead to sub 3% levels on the 10-year. So that bull rally is going to continue in the bond market. That's according to what Dominic Konstam says. Finally, David Rosenberg, also chief strategist at Gluskin Sheff. Now, this is exactly what he said. So we have deflation in credit, wages and rents, and from our lens, this is a toxic brew, Carol. So that's the problem. That's what's causing this big rally in the bond market, Matt.
All right. Thanks very much for that.